All right, scientists and techies, welcome to the channel. Alrighty, so it seems like we had another week of bust, meaning the government is still shut down. We don't have any data going on. So the CPI, man, we'll get into that in a little bit. So let's review what I predicted last week, right? So let's take a look at that real quick. Last week I predicted that we're going to gap up. And yes, on the daily, we did gap up a little bit, but we gap up a lot higher, right? And I said if price is very automated, meaning that if we have a lot of movement, a lot of price action, we will get above here and then we will sweep above this buy stop and then we'll get lower. So that's essentially did not happen. Okay. So it got really close to the buy stop. It did sweep above this relative equal highs here on the daily, but it did not get to my buy stop. That's okay because that's part of making predictions, right? You're not going to be 100% accurate, but as long as you get close enough to that, you can get the majority of the trade there. So, like I mentioned, price did gap up, swept this relative equal high on the daily, and then spent a whole lot of time in this area. Guess what this area is? So let me take a look at another time frame. This is a premium weekly gap. That premium weekly gap here, it did spend quite a bit of time there. It was going in range, and then when it comes to Thursday, I believe it was Thursday on the 13th, and then it just sharply dropped. Guess what? The sharp drop where? Into this discount weekly liquidity void. I mean, if you don't believe me, just go back to the recording last week. I had all this annotated, and then just like I mentioned in previous recording, when you have your Fibonacci, price literally will go from premium to discount, and this is essentially what happened here. You have a premium weekly gap, and price spent a whole lot of time there, swept above this relative equal high, and then drop into where? Into this discount weekly liquidity void. I mean, guys, make this annotation in your chart and you see it for yourself. Let me see if I can do that quickly for you. So this is the weekly, and this is what I'm talking about. There's a big gap here on the weekly basis. You always have to annotate those because either price will just go in there, spend a lot of time there, and you will see a lot of consolidation, or it's gonna refer to it real quick and then go back or about to its business. Okay, so let's take a look at the economic calendar. This is what I'm talking about for the CPI. Last week we had the CPI at 8:30, and it was a nothing burger. I mean, literally nothing happened. So I will show you right now. So you see, 8:30. This was on the 14th. Was it on the 14th? Now let me take a look back. So it was on Thursday the 13th. Nothing happened yet. That was on the 13th. I apologize for that, and nothing literally happened. There was no bleep in the radar, nothing. Okay, so what can I say? So let me see. Let me take a scroll back. 8:30. Even the previous day before, it was a nothing burger. 8:30, 8:30, 8:30. Where we are? Yeah. So Thursday, nothing. Friday, nothing. There was nothing going on. And as long as we have this government shutdown, it's gonna make it very hard to make any predictions. I mean, we had all the PPI 8:30. There was nothing going on. And I mean, I show both days here on this graph. So let me go back to this. So this was on Thursday, uh, Thursday 13. Okay. As you can see at 8:30, if it was a CPI, there would have been a big movement here. And then let me scroll over to Friday the 14th. Yeah, 8:30, there was nothing going on. Okay. And even for business inventories, yeah, 10 a.m., nothing happened. But surprisingly, when the market opened as usual, you see quite a bit of movement. And I took a couple trade, got a couple wins, got a couple losses. It is what it is. So this is where we are right now. Let's take a look at the seasonal tendency to see where we are right now, and then this is probably where I will start making my prognostication and prediction for next week. Let's see what we got right now. So, we got open on the what, on the 13th. Nope, we didn't open on the 13th, did we? Let me take a look. Man, I'm trying to get all the date lined up in my head. Okay, so yeah, so November 10th. This is when the week start off, obviously, and we went up a little bit. Like I said, spend a little bit of time here, and then quickly sharp drop. Now, people may think, okay, is the market going to collapse? Are we in the bear market? I mean, so far, I still say no. This is not a bear market. Is it a deep retracement? Yes. Is it a cause for concern? Absolutely. Yeah, I mean, we're tickering in the range where we feel like, oh yeah, it could go lower. To me, as long as long as it's above this low here or this relative equal lows, to me, I think we're still in a bullish market. But if let's say for example we open on Sunday and then Monday come and then we have a lot of acceleration on the downside and we clear these lows here, then yeah, that might be troublesome. But what you end up seeing is that it's gonna clear this low and then go back up. It's gonna feel like it might be a bullish, and then after that, it's gonna get either in this area right here or in the fair value gap in this area for October the 23rd to October 27th in that area, and then it'll just go back lower again. And the reason why I'm being a little bit skeptical about price being bullish is because when I'm looking at the dollar here, um, it's been consolidating for most of the time during the summer. Okay, and the dollar cleared these lows. Okay, the lows that was made on July 1st, it cleared those lows. It doesn't seem like it did here, but it did. It cleared those lows here, and it's been steadily going up. And it looks like it's clearing this range right here. Now, after it cleared this range, it will trace a little bit lower here. And I got a feeling it's going to get right on top of this and then start going back up. So if we have the dollar coming out of that consolidation range, more than likely we may see some price action a little bit lower. Or at best case scenarios, we're going to get a lot of volatility in the VIX and there will be a lot of wicks off, right? There will be a lot of wicks. So what I'm seeing for next week, let's take a quick look at that. Nope, that's not the one I wanted to show you. So what I'm seeing for next week is I'm anticipating price to gap up one more time. It's gonna make an attempt to go higher. Let me drop that into the daily here. And seeing some time to winter. So in the grand scheme of thing, we're still believe it or not in this range from here to here. We're still in a discount. So I'm anticipating that price is gonna make a little bit bump up. Let me see if I can find another one. Uh, So I'm gonna cover that in a little bit. So let's stay tuned for this one. Bearish scenario. So when we're looking at this, the entire range from here all the way to here, and price open and close on Friday one this time. This is still in the discount, okay? And it went through the 25th percentile of that discount. So I'm anticipating a little bit price action a little bit up if it's bearish. If we are going into a bearish scenario, what I'm anticipating to see is price is gonna go up into the middle of this daily or the block here, and then once it touch that, and then start falling off. If we see that particular scenario right here, we get into this fair value gap here, that bearish fair value gap, and then it touch this, and then did not even get higher to this, and then it's still going back lower. We are in a bearish scenario. And then it may go much lower and clear out these lows to go back up, just like I mentioned previously. So I think for me, I'm going to try to keep this one as simple as possible. So when we open up on Sunday, I'm anticipating a little bit of a gap up because this week is very influential. Oh, and also I want to show you that other wick that I showed earlier. So this spot right here, this is the reason why I'm saying we're still kind of like in the bullish market a little bit. That's the reason why I'm saying we may see a little bit more price up because it did get into the discount of this week, which was for the day of October 17. We did get to it in a little bit. We did not touch the 50%. So we wick into it, went all the way back up, and we're still inside of that range here, which is a daily fair value gap, which is also a bullish breaker fair value gap. Okay, so we got a low, high, and a lower low, and then you have all these candles here, all the bodies that are inside, if not above that gap. So, which is kind of like there's a scenario for both. Okay, so this is what I'm saying that it may go up a little bit more, and then if it just get into that gap right here, and I'm gonna show you again because right here, if it gets into this one here and then it's just falling off, then yeah, we're more than likely in a bearish scenario. But if it gets into that bullish breaker fair value gap here and then it keeps going higher and higher, like it keeps going higher and higher and past that gap here and then past the premium, then we're still in a bullish scenario. So yeah, so there was a lot of downside price action last week. So I'm anticipating at least some movement up before we start going lower if we need to go lower. Okay. So this is my prognostication and prediction for next week. Be careful because next week on the 20 on the 17th here we have nothing going on, and also on Wednesday we have FOMC at 2 p.m. So I will watch out for that. And I think that's probably the major thing that's going on. So we have Wednesday the 19th, we have FOMC at 2, and then we have jobless claim at 8:30 on Thursday. And I believe that's about it for next week. Okay. Let me see if we have any quarterly earnings, which I don't think so. Oh, actually, yes, we do. I have some quarterly earnings for next week. Man, I forget to check for that. Okay. So how can we forget? So we do have Nvidia on what's that on the 19th as well. So if that will be at 5 p.m. Eastern, so we gotta watch out for that. I think this is just a dividend payment here for the 20th for Microsoft. I don't think it is any quarterly earnings, but so yeah, we have Nvidia making quarterly earning report on the 19th. So this is gonna be big. So Wednesday, I'll watch out for Wednesday. Okay. So Wednesday is gonna be big. Not only we're going to have a quarterly announcement for Nvidia on the 19th, which is after the market close. This is where you're going to see a lot of spike in the market. Okay. So that's that. But also on the 19th, we have FOMC. And FOMC is usually like a dual trading strategy. Whatever you see happen between 2 p.m. to 2:30, anticipate the reverse or the opposite after 2:30. So meaning if price start going down at 2 p.m. and it start going down at 2 p.m. all the way until 2:30, then after 2:30, anticipate that price will be going back up. And there was a video that I covered about that, and I will link the description, or I will link that on the description below. Kind of like the title of the video is the dual trading strategy for FOMC. So always be on the lookout for that. Okay, so everybody, happy trading.